All right. Good afternoon, financial professionals. I'm Phil Haug, Senior VP of Sales with E4 Insurance Services, and I want to welcome you to today's brew, building relationships every week. Do apologize for the technical glitch. We had a little bit of a delay in the start today, so we do appreciate your patience. So we do appreciate you tuning in and sticking around an extra couple minutes to get started. For those of you joining Brew for the very first time, welcome. And we'd like to start out, as we do every Brew telecast, with celebrating today's national days. And today we have a couple interesting ones. We've got, in the past, Blake, I try to pull everything together and try to connect the dots on some stuff. And this is one where I think it's a little bit harder, but we'll see how it goes. But we've got last week was a really big stretch that I think I went too far with it. But we've got National Candy Corn Day, which I think is only appropriate when Halloween is tomorrow. We've got National Treat Your Pet Day and then National Mischief Night. So it seems like you treat your pet and you treat have the candy corn and you do the fun stuff to all in the same tomorrow night, but I guess we hear the night before. So on today's brew, we are going to be wrapping up October's focus planning series, Selling Your Business, and Nationwide is going to be joining us for an overview of today's business planning tools on how to use them with your business owner customers. With us on today's call from Nationwide, we have Blake Price. Blake is a financial planner with the Legacy Planning team here at Nationwide. Been there for 1 year, and prior to that was 8 years as director of financial planning and a lead advisor for a $500 million RIA. And we've got Matt Reddick, who is the RVP for the Upper Midwest for Life and Long-Term Care, and has been with Nationwide for, is that 19 years? Is that what I saw, right?
That is correct.
So
19 years.
almost 2 decades. So that's definitely worth some extra candy corn, right?
That's right.
But during today's podcast, if you have any questions, please raise your hand or use the chat box, and we'd be more than happy to answer the questions. And all attendees will be registered and entered into a drawing for a CE voucher and a Starbucks gift card, and we'll be announcing the winner at the end. So again, we appreciate you tuning in, and I'm looking forward to hearing from Matt and from Blake. And we want to say thank you for joining us today. And hand it off to you guys and kind of take off with the tools that Nationwide has to help business owners with planning and their transitions. So thank you.
Well, thanks, Phil. I appreciate it. Thanks, everybody, for joining. And I'm not going to take up much of Blake's time. He is the main attraction here. So couple of quick things. I really like this program that we have. And there aren't a lot of carriers doing the informal business valuations. And when you see that valuation and you see the write-up and you have someone like Blake and team willing to get on the phone and have a conversation and talk through that, we're finding a lot of, not only a lot of interest there, but it's leading to a lot of meaningful conversations. And so I'm really excited about this. It's not only for businesses. We actually are pretty heavy in the agricultural space. We've got a similar program in Land as Your Legacy. Well, we will help those farmers, ranchers, and those ancillary ag businesses, transition their wealth to the next generation, and primarily their operations is what they're concerned about. So without further ado, I'll turn it to Blake. Wait a minute, Blake. I just remembered one quick thing with our plans is that if we implement anything, and it is a non-qualified plan, so to speak, let's say we come up with a deferred comp plan, Nationwide does not do the administration for those plans.
Okay.
We would need everybody to work with a TPA on those.
Okay.
Perfect. Well, thank you for the nice introduction, Phil and Matt. I'll go ahead and jump into things today. I think, to tee things up before I share my screen and go through the presentation I prepared for everyone today, I think it's really important to say, why is this important, right? We have this great business owner, informal valuation tool. I think there's a lot of opportunity out there, but I just want to maybe spend a minute or two talking about why I think it's important and why it's a great opportunity for everyone on this call. So a few statistics here I put together. This is from the Exit Planning Institute's 2023 National State of Owner Readiness Report. Based on that report, 75% of business owners would like to exit their business within the next 10 years, but only 30% of them have an updated estate plan and only 24% of them have a will. From 2013 to 2023, there's also been a fairly significant shift in who business owners see as their most valued advisor. Financial advisors have become the #1 most trusted advisor, moving from the 5th spot to the 1st spot, overtook CPAs who were previously in that 1st spot, who moved down from the 1st position to the 3rd position. In 2013, when business owners were asked if they had sought outside advice regarding the exit from their business, only 38% of them expressed that they had, but today that number has increased to 68%. Furthermore, 69% of business owners in 2023 had exit strategy on their priority list, and 36% of them said it was their top priority. Lastly here, research indicates that 75% of business owners profoundly regret selling their company just 1 year after selling it, mainly due to a lack of a formal plan for life after business. And I think that's something that everyone on this call is suited to help them with as well, and navigating those challenges after they sell their business. So long story short, all of these statistics indicate to me a few things. Number one, business owners are wholly underprepared for their eventual exit from the business. And with roughly 80% of their net worth tied up in their business on average, this doesn't necessarily bode well for their financial futures. Second, business owners increasingly see financial advisors as their most trusted resource regarding exit planning conversations. And given the knowledge that you have around life after business, like retirement planning, investment planning, risk management planning, and frankly, the level of friendship that you have with your clients, I think everyone on this call is in a unique position and uniquely suited to help them with this topic. Thirdly, business owners are increasingly searching out advice on this topic, and they view it as one of their top priorities, in fact, which means that if you're not introducing this topic to them, someone else likely will, and they're going to capture the attention of your client and most likely win that business. So with that being said, I know that was a fairly long introduction, but I want to go through what is the business valuation? Why is it important? How we, our team at Nationwide, can help you with this conversation and your clients. What businesses are a good fit for the program, and how ultimately you would use our informal business valuation tool in the planning process. So let me share my screen here. I'll start going through some of that commentary here. Can everybody see this okay?
Yep.
This business valuation page? All right, perfect. So first and foremost, I think it's important to highlight, what is a business valuation. Now, typically, there's really two different types of valuations. There's a more formal valuation, or some people would refer to that as a qualified appraisal. Very rigorous process. Typically it's taking 1 to 3 months on average, probably, to complete that from start to finish. It takes a lot of time away from the business for the business owner to be a part of that process. There's a lot of documents involved there, a lot of discussion going back and forth. And then also, typically those more qualified appraisals are running a business owner 10 to 20 grand or more, right? Depending on the size of their business. So frankly, unless a business owner is planning on selling their company like tomorrow, right, it's probably going to be overkill in a lot of instances where the business owners just need to do some basic planning around their business. That's why our team at Nationwide offers the informal business valuation service, which needs a lot less information, number one, from business owners. We all know business owners are busy. It's hard enough to capture their attention, much less get information from them. So the less information you need to get, obviously, the higher probability that that relationship is going to move forward. So it's definitely less information required. We do use a wide range of criteria on our end, from market comps to different, basic business valuation formulas, looking at some of the data that's provided to give them a range of where their company would fall on that valuation spectrum. So it's really good, I think, for you guys and the purposes that you would use this. It's really useful when evaluating deals, right? If a business owner's been offered a deal, is it a good deal? Is it a bad deal, right? That can be a data point that you guys can use to help them with that decision. But I think to really cut to the chase here, it's really going to give them an idea of what is the estimated value of their business, right? That allows them to say, okay, well, If we have two business partners, now we can get into a discussion of how much life insurance that we need to back up that buy-sell agreement, right? If a key employee is involved in the transition plan, how much do we want to compensate them? Maybe we want to put some golden handcuffs arrangements in place for that key employee, right? So I think it's a really good way to start the conversation. Much less information required on the front end. So we have a pretty quick turnaround time there. Okay. So whether you're going to use it for buy-sell agreements, if you're doing a full financial plan for your client, you can plug in the estimated value of that business into your financial planning software to get how much insurance they would need to fund an islet, as an example, right? There's a lot of use cases there. Let me pause there for a second. Does anybody have any questions so far?
No, but we haven't had any hands raised yet, but I was going to
Okay.
bring up a story. So, well, about 18 months ago, we had one of the advisors that we work with used one of these services. You actually used your service and came up with a valuation where it was three cardiologists, and they came to the advisor and said, "Hey, it's been a minute. We need to adjust this. We need to look at it and see if we need to make any changes." And come to find out that the value of their practice was considerably larger than what they had had for it. When it was all said and done, it ended up generating about a $360,000 target premium sale. It was redoing the buy sells. It was, the business owners were looking at it and they had a business that was worth more than they thought. It was cash flowing more than they wanted. They wanted to start shelling money away, so they did some LRP strategies. It was disability buyouts. It kind of opened up the whole thing, but what was really cool about it is the advisor kept going back to this tool and leveraging that as saying, hey, like this business is worth 9 million. You need this. This business has this much cash flow, so you need to have the BOE. There's a lot of opportunities that came out of it where had there was not been that document, I don't know if I know the conversation would have been positive, but I don't know if it would have been as impactful. But it's a big sale. It's a big, I guess not a sale, but big solution that came from this document.
Yep.
And it was just a
Yeah.
simple question of, hey, it's been a minute. We should probably look at it, and it opened up the Pandora's box in a good way.
Yeah, unfortunately, Phil, I think, a lot of business owners, it's the typical story of the cobbler that doesn't take care of their own shoes, right?
Yeah.
They're so busy running that business where, unfortunately, they're not periodically evaluating the strategies that they currently have in place. Especially, do a little sidebar here. The Supreme Court recently ruled on the Connolly decision as an example, right? A lot of business owners have an entity purchase buy-sell arrangement set up. Long story short, with that recent ruling from the Supreme Court, that may not be the most favorable strategy, right?
Right.
For their transition plan now. So we're going through this process can uncover a lot of things where, hey, maybe their old advisor, right, told them to do it this way. They haven't called them in a while. It's time to review it. It's easy to point out some things there. And then, for the folks on this call that maybe not doing this day in and day out, right? Maybe their niche market is not business owners. I would like to encourage them not to necessarily shy away from having those conversations. Our team can definitely help aid in those discussions, and we give a lot of material as a deliverable, let's just say, that can help you have those conversations. In addition to that, one of the benefits of working with our team here is that we have access to a broad variety of skill sets. I mean, just on my team alone, we have over 15 JDs and CPAs with our advanced consulting group. So if you have questions about a defined benefit plan, you have questions about a LRP or a SERP or entity purchase versus cross purchase buy sell agreements, we'll be more than happy to hold your hand and walk you through that and help prepare you for those client meetings to help you be successful with ultimately a sale on the back end, right? Because that's how we all get paid. So,
Right.
I just want to encourage folks, even if it's not your bread and butter, we can help you with that. All right. So I'll touch on this a little bit. Who's a good fit for an informal business valuation? There's a lot of business owners out there, and they are business owners, but maybe they're more of a solopreneur type of practice, right? One guy, self-employed, basically. Those are not typically the best cases to work on. Number one, value of the business is probably going to be lower, right? So your premium on the back end and getting paid for that engagement is probably going to be a little bit lower. But secondarily, those businesses are a little bit more qualitatively valued, I would say, right? Where ultimately whoever's buying that business is buying a job, right? So there's a lot more qualitative factors that go into that versus maybe a larger business. I say large, relatively speaking. They got 2 or 3 employees at least, right? They have, the owner can take a vacation for a month without the business falling apart. More of a an actual business. So our minimum guidelines for this informal valuation program is 1.5 million in gross revenue. They need to have a stable earnings history. Obviously, the business can have losses from time to time, but they need to be demonstrating consistent profitability, and they must be an established business. We define that as being a business for longer than 5 years. Okay, so we don't do startups. Best opportunities are typically businesses from 5 to 50 million in revenue. They have multiple owners, they have key employees, and they also have larger estates as well. Any questions on those requirements or who may be a good fit?
No, that looks good. Well, you talked about no startups. I know we're in an economy right now where there's, you have startups that are nothing today, and in 3 years they're 10, 15, 20 million
Yeah.
dollar companies, especially like in the tech space. Are I know that there's guidelines, but if we have opportunities like that with some of these kind of rocket ship startups, are those things that you guys would consider if they get large enough, or are you still going to want to see a little bit longer track record?
Yeah, yeah. So I think if it's we take it on a case by case basis, right? We're not
Okay.
ever going to say, be hard and fast. Oh, this business is 1.49 million in revenue, so it's a no, right?
So
If we're if,
it's worth coming if you got something that's worth talking
yes,
about, bring it to the table. Okay.
correct. I would bring it to the table. I mean, maybe just shoot myself, someone on my team, Matt, an email and say, hey, here's kind of what I'm looking at. Does it make
Yeah.
sense for me to get information from this business owner? And then we
Okay.
can kind of talk through it there.
Okay.
So yeah, if it's a brand new company, within a year, I mean, it's tough because they're not even going to have really 1 year of financial data at that point. But
Yeah.
if they've been at least in business for 2 years, we could probably make something work there. But again, case by case, we'll be more than happy to work with you on that.
Okay.
Okay.
Perfect.
All right. So let me go down here, skip through a few slides here, talk about what we need in order to run this valuation. So we try to keep it pretty simple, as I mentioned earlier. Really, we need the business valuation fact finder completed. That's a quick, 2-pager there. There's about, half a dozen to a dozen questions that you guys would answer, little things to fill out, information on the business owner, etc. And then we really need 3 years of financials. So those financials can be either profit and loss statements and balance sheets, or they can be a full tax return with all of the schedules and statements. We do prefer tax returns just because each business is a little different. Some of them will hire a professional accounting firm to do their P&Ls. At that point, P&Ls are just as good
Mm-hmm.
as the tax returns. Other
Mm-hmm.
ones, maybe you're using QuickBooks and they're not as rigorous with their financial accounting standards. So we do prefer the tax returns, but we can work with P&Ls and balance sheets. Additional information we may want if you guys are looking at qualified planning opportunities or some other personal, estate planning opportunities, maybe send over a personal net worth statement, employee census, those sorts of things, whatever would be relevant to those opportunities. But for just the informal business valuation program, really 3 years of financials and that fact finder is all we need. Okay.
Okay.
So I know we have 9 minutes here. Let me just show briefly kind of what this all looks like on the back end. So let me reshare my other screen here with you guys. Okay. So this is an email. So this would be the final email write-up that we would send over. So typically there'll be 3 attachments to this email. There's going to be a about 50-page industry profile with some really good material in there. There's going to be a comparable sales report showing recent industry transactions for companies of similar sizes. And then there's going to be your traditional valuation formulas. And all 3 of those are in separate documents. And then we send over this really nice write-up to the advisor on the case with all of our notes. Hey, here's some things we saw that may affect the valuation. Here's some opportunities we saw from a case perspective. We summarize all of the different valuation formulas in a really nice chart here for you as well. All the different ones we used, which ones are relevant, give you a nice round number for planning purposes there, include some other definitions in here. So we have this write up and we walk through this with you on typically a 30 to 45-minute case consult call. So I know I'm speeding through this fast in the essence of time here,
Yeah.
but we do put a pretty robust report together.
I was
And
gonna
then,
I was gonna say
yep,
nothing about that output looks informal. That's like
yeah,
a lot of
right,
information, a lot of good information on there.
yep. So we try to answer all of the questions proactively in our email, of course. And then ideally, we'd have 30, 45 minutes to go through it together. And then if we need a second call to loop in one of our advanced consultants, we can have a second call. Some advisors also like us to be present on calls that they have with the business owners themselves.
Hmm.
I will say that is a little bit touchy, right? Depends on, your client. So if they're going to be more easygoing, right? We'd be more than happy to join those calls. Sometimes it can get into a little bit of a tit for tat, like, oh, my revenue is going to be $3 higher this year, so my number's off $12. And we want to stay away from those nitpicky conversations and stay focused on the strategic conversations that are actually going to help the business owner. Like, hey, here's like 5 strategies that you need to
Yeah.
implement to protect your business. So we're also available for those client calls. Say we probably on those 20, 30% of the time. So if you need us to be joining those calls with you as you're first getting up and running, we can do that too.
Perfect. Are you starting to see, you started out the presentation with a lot of numbers, right? And
Yep.
the things that it came out was there's a lot of need, a lot of questions, but there hasn't been a lot of answers, right? So it's you have
Yep.
75, 80% were wanting to do stuff and 20 and 30% have actually done stuff, right?
Yep.
And it's interesting to me that the number of people that regretted was very close to the same number of people that didn't have a plan. I think that's no coincidence, right?
Right.
Um, are you starting to see, being this is the area that you're focused in on, are you starting to see a commonality with an age, or I don't even say an age, but a time frame where the individual's looking at transitioning out of the business or partners looking at transitional? Is it 2 years, 5 years, 10 years? What are you guys typically seeing come across your desk?
Yeah, so I think there's unfortunately not a, I don't want to give you a political answer here and give you a non-answer, but I think it just depends, right? We get a range, I was working on a case with, unfortunately a business owner who was already like 76 years old and he wanted to sell next year because of some health
Mm-hmm.
issues, right?
Mm-hmm.
At that point, it's really too late. I don't want to say too late. There's always things that can be done, but you're not going to have all the tools in the toolbox that you can use to solve things for that individual as you would if you got in front of a 55-year-old business owner that has a 5 to 7 year runway, right?
Yeah.
That gives you the ability to do some proactive planning, right? Instead of reactive planning.
Yeah. Talk about
Um,
what you could do instead of what you should have done.
Exactly, 100%,
Yeah.
100%. So, I think sometimes it is, beating on those doors, right? Making some calls to some contacts, getting some referrals to business owners and bringing this up because there is a lot of interest there. So if you're targeting, I would say if there's a demographic to target, right, for people on
Yeah.
this call, I'm thinking of business owners probably between 45 to 60, right? That have, a probably at least a 3 year runway before they're looking to exit the business, right?
Mm-hmm.
That would be bread and butter for helping them implement the strategies they need to be successful in that endeavor.
Perfect.
Hey, Phil, and Blake and I have seen a pretty steady flow throughout the year. But
Mm-hmm.
I think with a week from now being one day post-election,
Yeah.
and people probably seeing a little more clarity, or at least they think they have more clarity on what to expect. I think it's going to pick up a little bit,
Yeah.
regardless of who's in the White House.
Right. Yeah. No, I mean, we're seeing it a lot across a lot of different capacities where everybody's kind of in a wait and see, whether it goes one way or another. I kind of feel like every ball's in the air and then somebody throws another ball up and I'm wondering if I got enough hands to catch them when they all come down. But, all markets like certainty, right? So, right now it's a very uncertain time. But to that point, I think that these are the items they're no longer an option. I think it's a necessity. I think if you are a business owner, you've got to come in and look at these things, and in absence of a plan, failure is your default option, right? So when you have these tools put into place, when you have these plans put into place, it obviously gives you a leg to move forward. And ultimately, every business is designed to either be sold, folded, or grown, right? So the services that you guys have, one of the numbers you threw out earlier that kind of jumped off was, $10,000 to $20,000 for a formal valuation. That in of itself is kind of a barrier of entry to a lot of business owners, right? They don't want to have that outflow. They don't want to spend that capital where, not only do you guys have this compliment, I don't like the word free because there's a cost, right? But the complimentary service that you guys provide gives them peace of mind, and then it might trigger a more formal evaluation, but they at least have a plan going forward. So I do want to appreciate and say thank you for taking your time to come in and give us some knowledge this week and show us the tools that Nationwide has. I'm assuming you guys will be able to give, you said drop an email. You're fine with us giving your guys' contact information, or do you think it's best to have the advisor get a hold of the RVP and then forward it on to you guys, or what's the best way to get information to you guys?
What I see most commonly is the advisor working through their RVP.
Okay.
Yeah,
Perfect.
I would echo that as well. Because ultimately on the back end of this, we're hopefully going to be helping with some case designs, right? Actually,
Right.
some opportunities. So going through the RVP, we'll kind of be the nerds behind the scenes, do the legwork, get the reports ready. That gives them the ability to very quickly and seamlessly prepare those illustrations, those different strategies that you may be looking at. So I would echo
Perfect.
Matt's comments there.
Perfect. Well, while we wait for any final questions or any hand raises, I do want to remind you that today's Brew telecast or podcast and our entire library will be recorded and shared on our Brew webpage at www.e4.insurance. And we do not have anybody that's popped into the chat box yet. So
I saw one
I,
that came
I did
through.
just
was there
see.
one?
Yeah.
Oh,
Yep. So it looks like Agatha made a comment here. How does
fee.
someone that is a fee only RIA go about doing that? So I think there should be RVPs for RIAs as well. I will say I came from a fee only RIA before I joined Nationwide, and Nationwide does have a lot of fee-based VUL products that can fit an RIA's needs. If you don't have someone that you're contacting today, though, you could reach out. There's an email address, businesslegacy@nationwide.com. I don't know, Matt, if you have that, if you could maybe send that over to Phil after our
Sure.
conversation as a follow-up. But we have
Yeah,
an inbox that's monitored, so you could send any requests to
yeah,
that
we
to that
we
inbox.
we do have a relationship. So we can, Aggie, if you want to get in contact with your RVP with E4, we can get the ball rolling for you
Yep.
and help guide you on that path. So for the RIAs, we do have we do have services available to help with getting the business placed and cases written and stuff like that. So, but with that, we're running up against our time, our quick time here. So, Blake, I do want you to pick a number between 1 and 36.
27.
27 is Aggie's lucky number. So Aggie is not only the one that had the question, but also will be the winner today for our complimentary CE voucher and our Starbucks gift card. And it'll be coming your way as compliments of E4 Insurance. So do appreciate your time, guys. Next week, we will be kicking off our November focus planning series, which will be Long-Term Care Awareness Month. Shane Van Patten, E4's Regional Vice President, will provide you with the best practices for integrating long-term care planning into your process and having an engaging conversation with your clients about it. So I do want to say thank you. Everybody have a good week and happy Halloween. See you on the
Have a great
next
week,
brew.
everyone.
Thank
Thanks.
you.
Thanks.